Hey, welcome back to my channel. Iraqi dinar news update today. We have special report. August 24th, 2025. Iraqi dinar revaluation. Good news soon to be announced by the Central Bank of Iraq. Introduction. A currency at the crossroads. For decades, the Iraqi dinar has been at the center of intense debate, speculation, and controversy. Its trajectory has reflected Iraq's turbulent history, wars, sanctions, political instability, oil booms and busts, and shifting global alliances. Yet, today, observers both inside Iraq and abroad believe the Iraqi dinar, IQD, is on the verge of a transformational shift. Recent fluctuations in the exchange rate, combined with Central Bank of Iraq, CBI, policy reforms, mounting foreign reserves, and global financial restructuring, have fueled expectations that the long-awaited revaluation, RV, of the Iraqi dinar is not just possible but imminent. On Sunday, August 24, 2025, the US dollar exchange rate against the dinar continued to climb. In Baghdad and Erbil, at Al-Khifa and Al-Harithia, stock exchanges in Baghdad, rates reached 1,478.5 IQD per dollar, compared to 1,410 earlier that morning. In local exchange shops, the rate ranged from 1,430 to 1,410 IQD, while in Erbil, it fluctuated between 1,418 to 1,417 IQD. At first glance, these numbers may seem like signs of instability, but within the context of Iraq's broader monetary policy, they may represent something deeper. The final fluctuations before a major correction. The much-anticipated IQD revaluation announcement by the CBI. 1. Historical background, from strength to weakness. The Iraqi dinar once stood as one of the most valuable currencies in the Middle East. Before the 1990 Gulf War, 1 IQD was worth more than $3. But decades of sanctions, war, and internal turmoil devastated the currency. By 2003, following the US-led invasion and regime change, the dinar lost most of its value, leading Iraq to introduce new currency notes. In the years since, Iraq's economy, anchored by vast oil reserves, has struggled with inflation, corruption, and dependence on dollar-based imports. The dinar remained pegged to the US dollar, but exchange rate volatility widened the gap between the official CBI rate and the parallel market rate. In January 2023, for example, official rate 1,450 IQD per USD, parallel market rate 1,610 IQD per USD, gap more than 10%. By February 2023, the CBI adjusted its official rate to 1,300 IQD per USD in an attempt to restore confidence and stabilize trade. Yet, the parallel market often ignored the official rate, undermining the bank's credibility. This persistent divergence has been a central theme in Iraq's monetary challenges. But now, insiders argue that the CBI has built the financial arsenal and policy framework necessary to end the discrepancy once and for all, via a revaluation. 2. The current situation, dollar pressures and dinar volatility. The August 24, 2025. Data highlights ongoing pressures. 2. The current situation, dollar pressures and dinar volatility. The August 24, 2025. Data highlights ongoing pressures. In just hours, Baghdad's markets saw the dinar fall from 1,410 to 1,478.5 per USD, a sharp intraday movement that underscores Iraq's dependency on dollar supply. Several factors explain these swings. 1. Dollar supply restrictions. The US has tightened cash shipments of dollars to Iraq since 2023, pushing local markets into scarcity. 2. CBI's currency auction system. Despite reforms, many Iraqi banks and exchange houses struggle to comply with new transparency standards, limiting their access to official dollars. 3. Regional smuggling and sanctions. Dollars often leak into sanctioned countries, driving parallel market demand. 4. Speculative activity. Traders exploit rate differences, amplifying volatility. The CBI maintains that Iraq's reserves, over $100 billion in foreign currencies and more than 140 tons of gold are sufficient to back the dinar at a much stronger level. 3. Why a revaluation is now on the horizon. The idea of a dinar revaluation is not new. Investors, speculators, and even Iraqi citizens have long hoped for a dramatic strengthening of the currency. For years, the notion seemed unrealistic, but 2025 presents a new set of conditions. CBI's reserves now exceed $100 billion, the highest in Iraq's history. These reserves are diversified across currencies and gold, providing a solid foundation for monetary stability. B. CBI policy shift. The central bank has aggressively tightened its supervision of banks, imposing fines on non-compliant institutions, and mandating electronic payment systems. This modernization aligns Iraq with Basel III banking standards and prepares the dinar for international acceptance. C. Narrowing the official parallel. While volatility persists, the long-term trend shows a gradual narrowing of the black market gap. This is a key IMF condition for currency normalization. D. Global financial realignment. With de-dollarization gaining momentum worldwide, especially among BRICS plus countries, Iraq is positioning itself to trade oil and goods in multiple currencies, including the Chinese yuan, euro, and potentially a revalued dinar. E. Political momentum. Prime Minister Mohammed Shia al-Sudani's government has repeatedly promised economic reform, diversification beyond oil, and stability. Announcing a revaluation would be a landmark achievement and a symbol of Iraq's sovereignty. 4. The mechanics of the revaluation. 1. Official announcement by CBI. The bank would declare a new peg or managed float, significantly strengthening the dinar. 2. Phased rollout. Banks and exchange houses would update systems, and citizens could exchange old notes at the new rate. 3. International recognition. Forex. Markets and global banks would adjust their platforms to reflect the new value. 4. Digital integration. Iraq's new digital payment infrastructure would support the transition, reducing reliance on physical cash. 5. Signals of imminence. August 21, 2025. CBI reported declining inflation and reduced currency exports, indicating domestic monetary tightening. August 22, 2025. Financial advisor Mizom Mohammed Saleh confirmed Iraq's reserves provide exceptional stability for the national currency. August 24, 2025. Despite market volatility, CBI reiterated its commitment to the 1,300 official rate, fueling speculation that a revaluation will soon replace temporary fixes. Moreover, Iraq's new Sovereign Guarantees Program, designed to attract foreign investment, signals readiness for a currency that commands greater trust. 6. The good news expected soon. Market insiders whisper that the Central Bank of Iraq will soon announce the revaluation, possibly within weeks. The timing is crucial. Citizens, weary of inflation and instability, are demanding a currency that reflects Iraq's true economic power. When the RV is announced, it will mark not just a financial adjustment but a psychological turning point, the end of decades of weakness and the start of a new era where Iraq reclaims its place in the global economy. 7. Potential impact of the RV. The revaluation will have far-reaching consequences. A. For Iraqis. Stronger purchasing power. Imports will become cheaper, reducing inflation. Higher wages in real terms. Salaries will stretch further. Confidence in banking. More. Citizens will deposit in banks rather than hoarding dollars at home. B. For foreign investors. Increased capital inflows. A stronger, stable dinar will attract foreign direct investment. Stock market boost. The Iraq Stock Exchange, ISX, could see a surge in activity. De-dollarization momentum. Iraq could price oil in dinars, yuan, or other currencies. Regional influence. A stronger dinar would boost Iraq's role in the Middle East's financial landscape. 8. Risks and challenges. Of course, revaluation is not without risks. Inflationary shock if poorly managed. Speculative bubbles in real estate and financial markets. Political opposition from groups benefiting from the parallel market system. Dependence on oil revenues remains a structural vulnerability, but with careful planning, these risks can be mitigated. Conclusion: the dawn of a new dinar. As Sunday's exchange rate movements show, Iraq's currency markets remain restless, but behind the volatility lies a clear direction toward stabilization, modernization, and revaluation. For years, Iraqis have endured the indignity of carrying wads of cash worth little abroad, of watching their currency undervalued despite their country's immense wealth. Now, with record reserves, strengthened institutions, and global realignments, the conditions are ripe for change. The good news, long anticipated, is that the Iraqi dinar revaluation is done, and the central bank is preparing. When that moment arrives, it will not only transform Iraq's economy, but also signal to the world that Iraq has entered a new era of financial sovereignty and stability.